Alright, hello everyone, and welcome back to Daily Update, my 1000 Day Challenge. This is day number 91, so let's get things started. Alright, so overall, the S&P 500, Nasdaq, and even ASHR-wise, we're definitely still leaning towards bullish market structure, and definitely things are still looking towards the upside. So very clearly, if you look into our S&P 500-wise, we are potentially still continuation towards the upside, but bear in mind that over here, there could be a lot more resistance because, like what I mentioned, we have a very clear double top formation over here, even if we're pushing towards the upside. You can see that there's a very much decrease in terms of momentum on the MACD. And yeah, so there's something to be a little bit cautious about. And if you look over here itself, we also have a hidden bearish divergence, whereby we've got a high and a higher high, and here a low and a potential lower low over here. So, but bearing in mind, the hidden bearish divergence will not be valid until we actually break below that. So a lot of times it really depends. And if you do want to look for a short, then perhaps you at least want a bearish market structure on at least a 4-hour or even a 1-hour time frame to even consider a short setup. Otherwise, tentatively, we could still a little bit shooting up, and it'll give a very poor risk setup if you go to enter right now in that sense. And moving along in terms of Nasdaq-wise, with a very nice consolidation over here. But I'm not looking or thinking that this breakout will actually make it strong, simply because even though we bring candlestick, a very nice, decent consolidation above resistance or now support over here. The key thing is that we didn't even retest this 20 exponential moving average along here. So basically, you can see that if you were to jump above or jump on the trampoline and then you're floating up in the air for extended period of time, it's much more likely that you will come down to take a rebound before you can jump to a higher high in that sense. You decided not to actually come back down, then very much likely you're just trying to flap your wings and trying to go a little bit higher, but many a times it doesn't last that strong, and it also doesn't last long, simply because you don't have that kind of momentum without the spring bounce effect. And reason being is very simple. When you have a false break pattern towards the downside, it actually results in people getting liquidated, or in people order getting triggered, or people are looking for a short. And thereafter, when the reverse thing happens, usually break towards the upside itself, these short sellers will actually be forced to actually cover the trades. So this adds fuel to the fire, which actually push towards the upside. And together with a lack of liquidity to the upside itself, it pushes price very much strongly towards the upside direction. So that's what you want to see in the trader, because the lack of liquidity over here could perhaps very fast squeeze to this next level where you'll be taking a profit, and then you will see retracement again. So this is basically what you want to see, and that tentatively makes things to a much longer bounce. And then moving along, if you look in terms of ASHR-wise, very nicely, we have also a clear bullish market structure ever since here and here, for higher high, and low and lower low. So we actually enter over a break over this high itself, a breakout trade that will not necessarily be a bad thing as well. But definitely, if you go in breakout trade, you'll put a buy stop order above this level, stop loss right over this level, and then you have a decent trading stop loss in that sense. But yeah, let's see how things goes, and definitely it has a decent consolidation. We do definitely want to see a stronger volume, which they definitely lack, and a break is being a great candlestick. Tentatively, it's a little bit less bullish in that sense. But let's see how things goes. Definitely, I'm still leaning to the bullish side of things, especially if we're talking about the midterm wise. And then in terms of KWAP wise, definitely still leaning bearish side of things, simply because we're still very much in the tentatively bearish market structure. The best we can ever get over here is a double top formation, which is still tentatively bearish. What we do want to see over here is a low and a higher low perhaps forming over here. If you can at least break above and close above that, they'll tentatively form a high and a higher high, low and a higher low. In which case, you look for either consolidation or pullback, and then you enter either breakout or pullback trade in order to catch the next wave towards the upside. And then moving along for Bitcoin itself, very clear, very simple. So I mentioned over here, with very nice consolidation period over here, but similarly, because you didn't have a false break setup, you can see that the fuel over here is actually much less in that sense. So two things can happen over here. I do think, or perhaps prefer, that we have a strong retracement, which would give a much more greater fuel adding over here, because tentatively, I'm pretty certain people are, a lot of them waiting over at these levels over here to add to the fuel. And this will lead to a very strong bounce, giving to the trigger signal that even more traders will be coming in, and it will very much push through a lack of liquidity sellers over here, and very much push towards the upside of things. On the other hand, if we were to consolidate over here, we can also break towards the upside, but bearing in mind that this will also mean that sellers will be capturing over here, and the move from here over here will also be less, and in which case, people will be more tentatively waiting to sell, especially when there's even a lack of volume. And you can very see much over here, there's this very clear declining trend of volume, even though price is moving towards the upside. So there's something to take note of, and there's something to be cautious about. All right, so for me, I'm staying clear of the market, waiting for a very clear retest, if we do close today with a bullish engulfing candlestick wise, tentatively we can consider almost retest as done, because you can see the low of the candle for today itself was 29.1K. And then you can also see a 20 exponential moving average was 29K itself. So almost there, I would consider this as almost confirm kind of retest kind of structure over here. So over here, you could potentially put a long side trade, but bear in mind this will be a very aggressive trade, simply because like what I mentioned, we have already seen a very clear declining trend itself. So if it does enter a breakout trade perspective, what you do want to see is that the minute we break above it, if we do not see a strong break above it, in which case we see a strong rejection now, immediately you'll close on the break even or with very tight stop loss itself. So this is to reduce and minimize the loss itself, meaning to say I will have a risk to reward profit over here with a large gap. But at the same time, when I do see actively price move towards the downside, I will close immediately for two reasons. This will give me a much better risk to reward setup when that happens. But at the same time, I do not want a random spike in that sense. So yeah, with that said, I've come to the end of today. If you guys have any questions, feel free to drop out comments below, and I'll see you guys tomorrow. Take care. Bye-bye.